Hi there. So one of the things that comes up quite often is how do you analyze your customer base? The reality is your entire customer base is really where you generate your revenue from, which is natural. And it also has a significant impact on how profitable you are. What I want to do here is look at how to analyze a customer base in a non-traditional way. Because normally the normal way we analyze traditionally customer bases is what we do is we look at that customer and we see if that customer is profitable. Look at the next one, is that profitable? So when we analyze whether or not the customers that we have are good or bad for our firm, we do it on an individual basis. Is that the best way to do it? I don't think so. The reason why is when you look at your entire customer base and you're trying to figure out as a whole how effective is that one customer relative to the entire mix and how that's doing, it's very hard to determine that. So when you do the individual basis, once you get above 10 or 15 customers, the mechanics we still use, even though we're at 50 to 100 or 200 customers, but the real value to us, helping us have a predictive model or at least understanding and navigating our client diversity and the ability to generate profits and where they're coming from, gets harder and harder. So what I want you to think about is let's take a look at a different approach. And here's the approach that I would look at. I would look at portfolio analysis technique. What that means is that we're going to shift away from the individual customer profit analysis to the customer mix insight. What you do here now is you literally apply portfolio analysis, like an investment portfolio. And what that does is it allows you to shift from those traditional methods. First of all, it no longer focuses on the individual. It focuses on the entire base as a starting point, right? And it's looking at the rate of return for the entire base. Then it goes to the next level where we then look at the individual components. So where we have this diversity in our base or on our customers, we start putting them in groupings or in types or in service mixes and so forth. This allows us to measure how that works in a more holistic approach and also gives us the ability to understand the groups better. This goes to the next level, which is what we call risk management or portfolio analysis. When you do risk management in a portfolio, you literally look at the rate of return per group of assets. Now with a customer base, you would look at per group type or customer group or profile analysis. If you look at a certain type of profile, and those are the profiles that you do. You then take it from that component and see whether or not those groups and how much of that represents your income, how much of that cost associated or resource associated to that level, and then you can actually calculate on the groups what's the rate of return or profitability. That makes more sense when we talk about our accounting firms because first of all, our resources, our customers, types of services are intertwined to a certain extent. We tend to do groups of services for a group of companies and they might be a little different. Our staff tends to work on more than one company at a time, and the way we allocate hours and times is not the most effective way because there's a lot of inefficiencies in that. So when we look at groups and we allocate our resources to it, it allows us to better understand our profitability, and also it allows us to better manage the allocation of resources. Depending on what groups we want to allocate the resources will depend on what kind of profitability mix we want. It helps us also understand the rate of return per group. You could have 5 customers that have a high profit level but require a lot of resources. So that might limit the amount of customers you can have in this category, even though it's a high profit level. You could have high volume of customers with low profit margins, but the amount of resources per customer is much lower. So that's another thing this allows you to do. It also allows you to understand what your customer base mix is. And this is an interesting concept because then we go to the next component, which is what we call strategic client engagement. When we look at our customers and the type of engagements we want to interact going in the future, we might want to look at the resource allocation, the profitability, and also how many are in this group already. So we might say we can't take any more VIP customers because the next VIP customer, we don't have the resource. That means we might have to plan more predictively, right, or hire more people. Or we can say that, we want to shift and do more of these, which means that we will no longer take maybe the low market ones or the ones that are very low profitability, but low return. And we're going to say we're going to start not taking those. It will allow us to be having a predictive client engagement and be more consistent up front. So these are the things that I would probably look at if I'm going to try to analyze the profitability of a firm first. First step I always do when I look at a firm is look at the customer base. Why? Because that's where the profitability is. So I want to assess how the resources are being allocated. I want to see what the predictable model looks like, and I also want to see what can we do to improve. And this is usually your best alternative when we think about where to go and how to take a snapshot of your firm and see where your best resources and your best allocation. So like I said, this is what I normally do when I go in and assess a firm or help them. One of the key things that I look at first is I take a look at their customer base, and I look at how is the customer base broken down based on a portfolio assessment. Look at where the high profitability, where the resources are being allocated, if there's any gaps, and also then try to tie it into the company strategy to make sure it's aligned or not. In most cases, it's not. And we then look at how do we reshift it. And the final part, how can we optimize that base and profitability? It's one of the quickest ways and the easiest ways for you to improve profitability for your firm if you constantly monitor and approach your customer base as a portfolio analysis. There's my 2 cents.